All right, traders, good afternoon. This is Christian Farmer's Traffic Trade Group, and this is your end of week market recap for Friday, February 27th. And it also concludes the second month of this year. So, what I'm going to do in this video is just kind of recap some of the trends that we've seen so far this year, some of the main focus points that have done well, some of them that haven't done well, and a couple of new things that I think are pretty interesting. I'll also recap performance for you in terms of where I am as well for the year. And I think it's a good time, as always, at these end of months to go through and kind of review what you've been doing and try to make sure that you're sticking to your game plan. Also, always looking for improvements in your process. And something that I talk about in the trading room quite a bit is what I want to achieve, what I'm trying to focus on. So it's a great time at the end of the month to kind of reflect upon that and think about what you want to be doing going forward in order to get you if you're not on the right track of trading and investing. So let's just talk a little bit about today first of all. But you can kind of see there was a couple things that really that stood out. Once again, the VIX is up again. I think part of that is going into the weekend when we don't know what's the whole picture about what's going on with Iran and if that's going to be escalated over the weekend or in the coming weeks. I guess you could say. Hence, the VIX has kind of stayed pretty has stayed heightened. I'll review that chart with you. Couple things that stood out is this telecom ETF. That's something that I got long in the TTG Global Trend portfolio a couple weeks back. Why did I do that? Not to say just because I want to get long telecom, but really about the names that are in the XTL. And that's something that I went over. That's something every time I get into something new or add it into the portfolio, I discuss that with members and the reasoning behind that. So if we take a look at the holdings of this and what it did today, this is obviously this is year to date. So let me just bring this to today so that we can account for today's performance. But AAOI had a huge move on earnings, up 57%. So being long this theme, right, has allowed me to capitalize on what's been going on in this trend. And again, one of the reasons why I moved uh, or purchase this in the TTG Global Trend portfolio is because I believe it's the biggest, it's the ETF with the largest weight to the optical names, your Lumentum or Light. Um, Sienna is in here as well, and obviously was the recipient of this big earnings report. AAOI. Now, did I know AAOI was going to do that on earnings? No, I didn't. But I know that the theme is very strong. So if we flip this back to year to date, right, that name's up 141%. VIAV, which is another name that I was owning for a while, both in stock as well. Another one of these optical names was up 67%. So again, nice catch here with just being in the right theme. Let's go back to just talk a little bit about for today, a couple other things that just bring the spreadsheet back into the picture. Couple other things that stood out to me is the move in bonds. That's something, if you've been watching my videos, I talked about bonds about 2 weeks ago, how I thought that there might be a trend change going on. I also just alluded to the fact that we've seen a lot of movement into bond yield replacements, things like utilities, things like dividend stocks, and REITs started to do well as well. These are all things that get higher yields, and sometimes investors will flock to those when yields are going down. We now see that, and I'm going to bring out a couple of those bond charts. But I think that's one of the big things as we go into the next month. Again, part of that probably has to do with the Iran situation, but there also just might be some changes that are going on as well. Energy did have a good day today, by the way. XOP was up 2.6% today. Healthcare had a nice day too. So again, maybe a little bit of a defensive theme going on there. Gold and silver also did pretty well today. Gold was up 1.3%, and silver continues to outperform. Silver was up 5.6% today. So big move out of silver. The other thing I want to do with the spreadsheet up is just talk about where we are at this point year to date. Really, the two things that really stand out are probably more than two things, but there's two things that I really want to discuss here. Is that SPY for year to date, the overall market is the U.S. market is just up a little bit less than 1%. However, the thing that's just really sticks out like a sore thumb here is that if you take those same names that are in SPY and you equally weight them instead of market cap weight them, that same index is up 7%. Same names, just different weighting scheme. And of course, that has to do with the bigger names underperforming the Mag 7, or if this at this point you want to call them the Lag 7, that's fine. For you could definitely call them the Lag 7 for this year because they've certainly underperformed. And you can see that with the Qs year to date too is down 1.1%. Mid caps and small caps are doing just fine, even though small caps have kind of stalled a bit, basically went sideways for the month. Dow got a little bit hit there at the end of the month and is only up 2%. But again, the thing that really stands out is the RSP equally weighted ETF is up 7% year to date. Just to go over a few other things now that the month is officially done. There's your TLT, which is up now 4.2% and outpacing both SPY and Qs. The ARK Innovation ETF continues to lag. That's down 5%. Look at the IBD 50 ETF is up 17%. They're in the right areas. Very well played there. Growth and value. We know that value got off to a really good start in 2026. That's up 8.5% versus large cap growth down 5.5%. Both small cap growth and value are doing well, but value really outperforming. There's your Bitcoin is down 25% year to date, even though coming back a little bit at the end of the month. Gold is up 22% so far year to date. Low volatility equities are doing well. They're up 8.4% year to date. And there's your dividends that I talked about. They are up 10.7%. I just want to also examine sectors, and I have to bring up another spreadsheet for that, for where we are. And the reason why I'm showing you this is just so that you could see what is going on with this market. I think a lot of people sometimes will just kind of miscategorize things a little bit. So let me just blow this up a little bit. They'll tend to, like, from what I hear all the time, sometimes on social media, is that, oh, it's consumer staples. That's what market we have. That's fine if you want to if you want to miscategorize it. Consumer staples have done well this year. They're up about 16%, but that's not the only thing that's going up. And clearly, you could see there's about six or seven, well, maybe four or five different groups, because you got a few different energy ETFs in here. Oil services up 39%. Energy is up 25% year to date. There's your gold and silver miners. Silver miners, which have made a new all-time high, are up 41% year to date. But something like this, like AI and power, that's up 18.4%. So if you're wondering what's driving that, I'm going to bring this ETF up too, so that you can kind of see. So it's a little bit different than you think. You've got Bloom Energy up 79%. You've got this is year to date top performance. This is VRT, which has had a really good year, had a really good earnings report, up 57%. Generac is up 65% year to date. So GE Vernova is up 33% year to date. All right, so some really good performance. I see a good amount of power, industrials. This is an infrastructure company. Clearly some of the industrial names have adapted to get power from data centers and extract power from other areas of the market. Even with some names really underperforming year to date, like ALAB is in here, that's down 28%. But even so, the whole ETF is up about it says 13% year to date. For some reason, I have 18.4%. But metals and mining also up 15.2%. Industrials, robotics and automation, aerospace and defense. These are your strong groups. What's not strong? Oh, sorry, I'm showing the wrong screen. Let me replace this. Forget that I have to flip back to this. There we go. So I was just talking about XME. Aerospace and defense, all up double digits for the year. What's not performing well? Software. We know. I think unless you haven't been paying attention at all to the market, um, but you probably know that one. Software is down 23%. Also, your internet names, a lot of FANG names in this one is down 10%. China, as much as how well emerging markets are doing, China is not really has not been involved in the rally, and that's one of the worst performing countries and groups year to date. Financials are now down 6.2%. Tech is down again, just very interesting. Tech, which is about 34% of the whole S&P market cap weighted, is down 3.6% year to date. Right, that's a big draw on this. Communications. Remember, a couple years ago, the S&P split up the FANG names into three different groups. They kept Microsoft and Nvidia in tech, but they put Google, Meta, Netflix into the communications ETF, and then they put Amazon and Tesla into the XLY ETF. Where is XLY on my list? Um, Oh, there it is. It's right there. So all of those, right? You break those up, and they're all underperforming. All three of those sectors that have the Fang or Mag 7 or Great 8, as I call them. All of those ETFs are underperforming because they have a big weight in them. Let's talk about international just for a second. South Korea, just an unbelievable move. I think South Korea was up 100% in 2025, tacking on another 55%. Um, Again, reminder that it's just two companies make up almost 50% of that ETF. That's Samsung and SK Hynix. Those are the big memory chip names, as well as Samsung does a lot of other things too, including make phones. Um, Other outside of the leader there, you've got a lot of Latin America. A lot of these are very commodity based. So Peru's up 30%. Brazil's up 22%. Um, don't see the other one that I'm looking for, but that's okay. Mexico's up 17% year to date. Taiwan's up 19% year to date. So even though FXI, where is FXI? Do I have FXI on this list? Let's see. There it is, all the way in the bottom. That's down 3% year to date. Keep in mind that the EEM ETF is up 14.3% year to date. So you must be asking, how is the EEM up 14% year to date and FXI is down 2.6%? Well, China's about a little bit less than 20% of that EEM ETF. It's the other areas of the market. It is South Korea, which I think is about 18% of EEM, and Taiwan, which is I believe the number one weight. Taiwan is the biggest country weight now in the EEM ETF at around like 19%, which is also what it's up year to date. So the other countries that are in the emerging markets are really bringing up their performance with China not even really moving that much this year. In fact, down this year. So that's a quick summary, which is just what I wanted to do for this video. My performance year to date. It's interesting. The TTG global trend portfolio that I constructed in the beginning of this year is outperforming my trading account pretty decently. That portfolio is up 11% year to date, and my trading account is up 4% year to date. So really nice outperformance for the global trend portfolio. Things that have worked really well in that account. I've got 22 ETFs in that ETF in that account. Um, Things that have worked really well is also getting out of some of the things that I started with a good allocation to financials in the beginning of the year. I took those out. I have no financial exposure anymore. I took some of those out for gains in the beginning of the year, and then I took the remaining position. I kind of scaled out of it as it wasn't working, which I think is a pretty good technique, by the way, to basically scale in and out of things, not only for profits, but also when something isn't working too, just to say, hey, I'm going to reduce this and then continue to do so if it doesn't work. What also did has done that's one thing, because I kind of view things like that as big wins, taking things that begin to kind of turn. But XLE is I think my best performer right now, which is up about 20%. I think since I put that in the portfolio. And then just having international right now, 25% of the global trend portfolio is international. So I've been capitalizing on that theme. We've got emerging markets, we've got international developed markets in there, we've got international small caps in there. I do have EWI, the South Korea ETF, as a small weight in there, and that's kind of that has carried the performance. Also, being long industrials, I already mentioned that telecom ETF. I put that in the portfolio a couple of weeks back, and there you go. A couple other things, so just to talk about this market and where we are going into March. So I think one good thing to realize is that we're out of a weak seasonal month. February is not good on average for the market. So we essentially just went sideways. We've been going sideways now for SPY since the beginning of the year. As I mentioned, we're just barely up for the year, but you could just call this sideways. Very different looking, of course, than what the RSP is doing, which is just continues to as nice methodical trend higher. This really just shows that there's strength in this market. It's just not in the mega cap names, which are dragging down the performance. Hence, when we look at the Qs chart, it is not the leader this year. It's been the leader in past years, but this is not a year right now for basically high growth. Right, we don't know how long this consolidation is going to last, but I don't know if those names that are spending all that money on capex are going to be the leaders of this market anymore for now, and I'm fine with that. I think that there's plenty of other areas in this market that are picking up the slack. Regardless, 592.67 is the level to watch there. I mentioned IWM, which underperformed today. Right, this is we're going to start. You can see that this value area is like an inside, like almost like an inside month inside this previous value area. So again, this is just moving in a range for now. I wanted to just go over, I mentioned bonds earlier, but here's your break higher in bonds. I want to look at this at the weekly chart, and I want to zoom out to see the whole picture, because when you see the whole picture here in the TLT ETF, you can see that this has been traveling in a sideways range. This is a big base, and I would be watching for a base breakout here. I would make sure that you also look at the other maturities, because they are actually moving in a bigger trend than what TLT is doing right now. Keep in mind, my um, charts are adjusted for dividends, and these pay out dividends quite frequently. I think it's monthly for TLT. And so I'm adjusting for that in the performance. Here's your 3 to 7 year bond ETF. This is also, I added this to the TTG Global Trend portfolio about a month ago, I think. Maybe not a month ago, maybe about 3 weeks ago. But you could see how well the performance is doing in here with your shorter dated bonds. And if you want to go super short, looking at 1 to 3 year bonds, that trend is really nice. Now, again, you just have to realize that even though this looks like huge performance, this is 78.50, this is 83. So not going to move like a tech stock, but certainly the trend here is really decent, especially when you reinvest your dividends. All right, guys. So that's a quick update and end of month look and first 2 months of this year, where the performance is, and a lot of things excelling in this market, but the big caps and the big growth are not for now. Leave it there, guys. Have a great weekend. And if you want to be a part of that program, the TTG Global Trend Portfolio, as well as our trading room, go to tribecatradegroup.com. Have